Hello, folks. Welcome to Market Trends. It's David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone as always. Happy Friday, Thursday, March 20th. Going to start with some disclosures and put in a few others in the chat. Hope everyone's having a great day. All right. So, interesting sort of Fed meeting yesterday, which was, when you really think about it, on the net, not a hugely, probably macro positive for the market. However, it wasn't anything too disruptive or too blatantly negative, so didn't have the hugest impact. Now, um, these are the standardized returns, some ETFs I'm going to show you. I shared some disclosures and the prospectuses for these ETFs. We will look at some of these and we'll just share the standardized returns. Okay, so remember, if you go to tradestation.com and then you basically click on Insights, this takes you to our Market Insights blog, and then there is right here the blog post about today. Our energy stocks taking leadership, and that's some things we're going to be kind of looking at today. But first, I wanted to start off. I'm actually going to use a trading view chart because I'm actually working on a trading view idea. Remember, various ideas here you can look at. For some reason, when I live stream, these don't always populate as quickly as they should. But regardless, you might want to take a look at these. There's a trading view idea I was working on. I want to show you this chart. The S&P 500 to start. To me, what's interesting about this is that basically, if we look back to the period of the more or less the election, let's call it the election days. In many ways, election days, is on a Tuesday, but in many ways, the Monday before is kind of part of the same thing, psychologically. So if we look here, this is the range on the Monday, and then basically, sorry, there's a range. Look how and then basically it was support. And now what's interesting is as we knife down, we come up, and now the bottom of election Monday, the low, is kind of potentially turning into resistance. Now, on state of the market on Monday, we had identified a level closer to this as the potential level to look for resistance. It was up there. It was at 57.33, I think, to 57.73, which was kind of a range between basically the low of mid-January and the low, I think, on the 4th of March. So we had identified a different range. But what's interesting is we haven't really reached that. Instead, we have found resistance at another level back here. And that to me is something just kind of to bear in mind because, normally I look to the more recent level when I want to look at where the support or resistance is going to be. And in this case, we might have been looking back further. It also kind of adds a little bit more to the potential sort of, negative momentum here. We also see here that the 50-day moving average is going under the 100-day. They're both negative here. So I want to just kind of point this out. We seem to be stalling under the 200-day moving average and under this level from election Monday. So it's kind of interesting. The election was support. Everyone was bullish on what it meant for the economy. And now the election is resistance. So I'm probably going to do a trading view idea on this for tomorrow, but I want to kind of share it with you guys just so you see. Now I want to jump over here to our workspace. Now remember, if you go to the blog, at the top of the blog, we have a link. And if you go into the link, it has a zip file. And the zip file has a series of ELDs, which are TradeStation Easy Language documents. These have a series of indicators in them. If you import the indicators, you can then open the workspaces, which end in TSW. You'll see the TSW and the ELD. So open the ELD first, import the workspaces, and then open the TSW, and you can see the different workspaces. So here, if you look, MTES is one we've looked at a lot. This is a workspace that is kind of designed for helping people navigate S&P futures. And what I want to point out about this is kind of interesting is, first of all, is that this morning it gave another buy signal. You see stochastics hit oversold and the 50-hour moving average was rising, which was basically the green line here. You can see this green line is the average. So basically the histogram is each candle on the 50-hour rising or falling. and then this smooths it out. So basically, when this thick green line is green, it shows that we've had an ascending 50-hour moving average on the futures. And I have found this to be consistently a source of interesting short-term trading signals for the ES, for the S&P futures. So that's kind of interesting. Another pattern I wanted to just point out, this is now the cash index down here. But what we can see on the cash index is we had this rally kind of off the lows, and we came down and we held a 50% retracement of it on the 18th, on Monday, or on Tuesday, and we bounced. So that's just kind of interesting as well. So overall, I think a lot of this has now been expressed, but we still have this kind of issue from back here on the 10th. This bearish kind of, it's not a true gap on the daily chart, but it is a gap on the hourly, and you can see this level right around 5,700. It's obviously a round number, and there's just a lot of kind of basic simple kind of stuff at 5,700. It was also a kind of gap down on 2 Mondays ago. We had this on the Friday, and then we just came in on Monday and just came out. The bears came out swinging, and they basically drove it down all week. So here we essentially have something where it looks like resistance is emerging closer to kind of 5,700, which, as I showed on this chart here, is also kind of an interesting level because it does go back to this here. So, the election Monday. So basically, I think these are some important sort of points here. And I just wanted to kind of highlight that because, we basically said the thing about this market now is that, even if we don't have a recession per se or anything like that, the problem is multiples are relatively high. And right now, the momentum and the direction is something that people see as at least getting in a spot that is not as good. And when you have a sort of thing like that shifting, people may be looking for a sense that the shift or the move is over. And there's not that much clear sense yet that the move is over. So some of the levels I outlined here was a retest of 5,500, but also the September low around 5,406. People might look for something closer to that as the kind of, drop, lower high, and then a continuation, and maybe that ends this overall move. Overall, it's really too hard. There's a lot of political things that could happen. Obviously, it could trigger this. It could be all sorts of unknowns in a moment like this. But I want to just kind of point out that at this point, those are some of the things that are jumping out to me. But remember, we did actually, a week ago, we talked about the potential for the market to stabilize and have a bounce precisely because of the Fed, precisely because of NVIDIA and the AI event. And we basically outlined a level of move up to 57.33. Didn't get that far up, but we got somewhere that far up. We got up to 57.10-ish. So that's kind of where we are now. And now a different level is emerging. And, when these things present themselves, you have to recognize them. And if this does turn into more of a resistance area here, tomorrow with it being a Friday and everything else, if there's anything negative, people might be looking for the, intermediate term trend to the downside to reassert itself. So I want to just kind of point that out. Okay. Also, just some other interesting things here is that basically I'm going to jump over to back in my MT main. I'm going to show the chart. But what was interesting to me was that basically, Apple kind of continues to have is an interesting sort of things that we're seeing, but Apple continues to have some difficult news today. The Information, which is, I believe, a British media publication, said that Apple is losing $1 billion, I think, a year. I wasn't sure. If you want to just Google that, and you can find the negative report. They're losing $1 billion a year on their Apple TV product. There's another report that they are making significant changes to the new iPhone in terms of not having a port for charging. And again, all these are things I think you have to realize is that right now Apple's kind of shown that, what, they're not maybe in their A game right now. They were not look at the AI done, a lot of just kind of things like that are, maybe putting a little bit of cloud over Apple. So the question is, are they going to successfully execute this product change, which potentially could be something that could be disruptive? So I think people might actually start to look at Apple and say it might actually have some risk of execution and design and everything else. We've been, they haven't been exactly hitting it out of the park for the last 12 months. And so I think that, we just have to kind of bear that in mind right now. So I think right now you realize is that Apple also is a stock where it trades at a high multiple without the earnings growth and the revenue growth. And people look at this, and I just want to point out that there could be, again, people might start to say the risks are higher, the multiple maybe should not be this high. And that's kind of the way people might be looking at Apple here. So now let's just jump back over to my blog post here, and I kind of point out stalling at 5,700. I kind of point out these key things in here as well. But let's take a look now at some of the things from the Fed, because this was interesting. And overall, I think when we look at this report from the Fed, we can see essentially that it was on the net, not a super like bullish sort of statement from the Fed and dot plot from the Fed. They basically cut their the estimate for GDP. That's going to necessarily take away earnings from the S&P. They raised their estimate for inflation, and then they basically, the one kind of dovish thing they did was they're now going to be doing less QT. So this is more of the sort of dovish thing on the longer end of the curve to potentially kind of keep down yields. So this was the one dovish thing. But then if you look at the dot plot, what they did was back in December, you basically had, one guy, all the dots. You had one guy who was said there was going to be no cuts this year. Now you have four. You used to have, the number of people saying one cut this year went from three policymakers to four. And the guys looking for three cuts went from three down to two. And the people looking for 4 or 5 cuts, before it was 1 at 4, 1 at 5. Now there's 0. So basically what we're seeing on net is we're seeing that the overall target is still looking for 2 rate cuts this year. But now what we're seeing is we're seeing less on the dovish side and more on the hawkish side. At the same time, they're raising the inflation estimate and lowering the GDP estimate. So this is in many ways more of a stagflationary dot plot. Now, I will also just mention that I continue to think that one of the reasons why, the market, I think, had a lot of optimism coming to the year, or at least one of the reasons why, I saw potential in it, was the fact that inflation has a structural bias to the downside because of shelter costs coming down. In many ways, that's a simple, raw mathematical process. And the fact is that does remain in the background. And I think the problem is that the issue is that if people forget about it too much and they get too worried about tariffs, or they get too worried about whatever, and then they suddenly get surprised by, wow, inflation's coming down because of shelter. So I think we have to realize there is still a structural bias that is a little bit more favorable than some people might think. So it's hard to get overly negative. But I still think we have to realize here is at this point in time, the expectation that I'm going to have is that essentially Jerome Powell is going to wait until we get into, let me go back to that. He's going to wait until we get more data. And I don't have the date in front of me, but we're now in March. The March inflation data is going to come out in the first 2 weeks of April. We will get, and then the May meeting, nothing is expected, and then there will also be more data before that June meeting when they're expected to cut. So we're likely to see data dependency and further information coming from the Fed as those data points come out. Now, of course, the other giant elephant in the room is April 2nd, we're going to get more announcements on tariffs from the White House. So these are just other things, reciprocal tariffs. So this is just something else that's just kind of out there, and it puts us in this kind of paralysis limbo, or whatever you want to call it, of not really knowing. But overall, the structural weight does seem to be in the direction of negativity and expectations that earnings are going to be lower, the economy is going to be weaker, and in that environment, multiples remain relatively high, and it's difficult to really be potentially looking to get too aggressive long side equities. And I think that's really the underlying backdrop we have here. So we have that kind of context that's negative overall for equities, and the question simply becomes, how does it play out technically? And then we did identify that level there. All right, so let me now go to, I mentioned the Fed stuff. One last thing I will mention also is that today, President Trump was talking about the need for rate cuts and things like that. Now, I think you have to realize is that there is some risk of there being some conflict between the White House and the Fed. And I think that's something that could happen. The Fed is actually moving away from rate cuts. Remember, in December, they said 4. No, I think whenever it was last year, they said 4 rate cuts. Then in December, they said 2. Now they're saying 2, but not as decisively as they did before. So we're kind of in a spot where we are actually swinging a little bit more in the hawkish direction, and that does set up some potential for conflict with the White House. And of course, that's something you can't bet on or plan or anything like that, but it's something we have to realize is one of those potential things that could be out there in the future as time moves on. Okay, so I'm going to get to energy now because this is one of the big things that kind of jumped out to me. Let me hide myself. I'm going to look at some of this stuff with the platform. Let's go back to MT main. And one of you guys actually emailed me and wanted to know about this workspace. So this is included. I use this in State of the Market on Mondays as well. I use a slightly different workspace for that one, but you guys, if you're interested, if you want to look, you can actually um, see this in MT main and then key ETFs. Now look on a year-to-date basis. Energy is the leading sector. Isn't that interesting? Now, a lot of people probably, may remember if you've been watching me for a while that, I've been very concerned about energy because of the increasing supply and the weakness in China and all that stuff. And for the most part, it has been correct for the last couple of years. We've done a lot of trading view ideas on energy, different energy stocks that, in many ways were not necessarily bullish and they did move lower, more or less as the charts seem to be kind of pointing. And, now we're at a spot that where I think we have to realize we might be in a different environment. And so what's interesting to me right here is, first of all, that energy emerging as a top performing sector. But look at this table on the right side here of our blog. We actually went to etfdatabase.com, which is now called Vetify as well, ETFDB. And we went through, and you can actually find the valuations for ETFs on there. And what's interesting is the energy ETF has the lowest, it's the only one with single digit, PE ratio. So it's kind of interesting right now. Everyone's worried about Mag 7 being too expensive and high multiples and all that. Well, the solution, maybe I want to say the solution, but if you're looking for value, people can say that energy is down there. Now, we've been saying for several weeks now that one of the kind of latent underlying kind of subtle reasons or appeals about energy stocks is the fact that they are value stocks and they trade at lower multiples. And that's something I wanted to highlight with this table here. I'll also just mention that real estate, 34 times earnings. I'm not sure if that's exactly the right way to look at it. Sometimes real estate trades with a thing called funds from operations, FFO, instead of earnings per share. And I'm not sure this is actually earnings per share or FFO based. So I want to emphasize that this might be overstating the multiple on real estate. Nonetheless, consumer discretionary, that's Tesla and Amazon. So it's just kind of interesting to realize here that energy here is trading at this low kind of multiple. Obviously, if you're worried about stagflation, inflation, things like that, energy is one of those things that people kind of go to. If stagflation, 1970s, or oil, all that. It's out there, and it also does make sense because what is, an environment like that, things like energy will, are in a stagflationary environment. Energy are things that could potentially be higher. But the other thing is, in many ways, and we've been kind of saying this for a while, right now we have the opposite of Goldilocks in a lot of ways. The economy is too good for the Fed to be dovish, and the job market is too good, but it's not good enough for the to see strong earnings growth. So you kind of have this kind of not so great environment of an environment that of a market that is like I said, it is the rates are not necessarily going to come shooting down because we're not looking at a bad job market, but inflation is also still kind of high, but growth is also, earnings growth is not as great, economic growth is not as great, and that does create an environment where something like energy can hang in there because we do have an economy that is still in expansion. We don't have huge numbers of job losses, and that actually is an underlying positive for energy. People will still be traveling and all that sort of stuff and driving, and the normal uses for energy that come from the economy will remain in place. So in this sort of environment, energy actually makes sense kind of from a macro perspective. There's also a guy on CNBC, if you want to look for him, Eric Nuttall. He was just kind of interesting, but he made a point, and I've been seeing it more, is that basically in American shale production may have hit a peak. Not to say it's going to go away tomorrow, but people are starting to say that over the next several years into the future, that we're actually going to see less of a growing just flood of American energy. And according to this gentleman, he said if it were not for American shale production in the last 5 to 6 years, the world would have a deficit of oil. So it's just something to think about. Shale production has grown dramatically, and it could just be something out there. When we look at oil hanging in where it is, it might actually be at a spot when it's kind of holding. Now, speaking of that, oil had a little bit of a rally today. Why? Because President Trump mentioned he did some kind of new sanctions on Iran. Again, the key point is that energy continues to benefit from this geopolitical situation, which we now have just kind of more issues in the Middle East, and that is another thing that kind of keeps energy in the front of people's minds. There's also just growing demand for natural gas, and I'll tell you, natural gas I find a very confusing asset. I don't talk about it very much or look at it very much, but I do know that it has been moving higher. There is a demand for LNG, and the other thing is that there are clear names in the space that can benefit, and we're going to get to that in 1 second. So let's actually see how you can find some of these names and look at them. Well, actually, let me first just show you that we did a trading view idea here on Chevron and on HES. Just let's take a look at these. This one on Chevron and on HES here, and CVX. And this is to me just kind of interesting because we're seeing patterns like this across a lot of charts. This is the daily chart, and this is the weekly chart. And if you look at HES here on Chevron on the weekly, you can see it really hasn't gone anywhere for a long time. I mean, this is basically all the way back here. This is 2022. So you have a thing that's a stock in between 140 and 165 for a long time. So the point is that this thing escapes and starts moving. This is how a run could potentially begin. So a stock like this, it hasn't gone anywhere for a while. A name like this could extend. And also, these are the sort of things when people might want to fire up Option Station Pro and look for some option strategies, because names like this can actually, kind of sometimes work with options. Now, I'm not prepared to do that right now, but I do want to mention some of the big oil names, some of the big energy names can really trade nicely with options, and sometimes out of the money calls can be relatively inexpensive in them, and they can be things that can kind of extend, because when you have a stock that's like $165 stock and the options are not very expensive, a 15-point move is entirely feasible, and options can sometimes really generate leverage on a move like that. So Chevron here is interesting, and HES, which has this field coming online off Guyana, has some interesting things happening as well. HES. So there's another one. These charts are so similar. Look at how the moving averages are all crossing here. So now I made a special scanner. I put it in really big font because I know sometimes it's hard to see scanner on the webinars and stuff. So I want to point this out. If you actually look here, I give instructions on how to do this. This is how to say, let's go and find energy stocks, okay? Because, they are, we're talking about them. They're potentially in the news and or potentially starting to outperform. And then, but what are they? Because we haven't looked at them for a long time. And some of the new ones are maybe working and some of the old ones are not. So, let's go and start finding energy stocks. So we can just go to scanner and we set the symbol universe to all stocks. And then we use basically the indicator that is called sector, and we set it to energy, but you got to use quotation marks on it. So let me just show you quickly what I did. I built this one already to not waste too much time. So basically what we have right here is, if you go to symbol universe, you can see that I basically selected all stocks. And then in scan criteria, one thing I just did was I did market capitalization of at least $1 billion, which is 1,000 because it's in millions. So basically I went here, and you have these drop downs, and well, you know what? This is something, I've just, ever since I got the Windows upgrade, all right, it's just been slower. If you go to, if you drop down to select criteria and you go to capitalization, it will have market capitalization, which I already selected here, just so you can see that. But then the other thing you do is you go to indicator, and then you go down and you look for sector. Now, you can also do industry, but there's different industries inside of the energy sector. You have like oil and gas drilling, you have services, you have like pipelines, things like that. So just realize that industry sometimes is too granular, but sector is going to get you in the ballpark pretty good. So if you go down here and you select sector, which is one of them, and you can see it's right there, sector. I already have it. So I'm just going to set you set sector, and you set the operator to equal, and then you do quote energy, and you run search. It will then generate this list. So you can see here, I can sort by market cap: Exxon, Chevron, Shell. I'm going to click here. I think TTE is Total, the French company. So I click the whole tickers. Now I'm going to go to my MT main, and I'm going to go to MA tools. And these are one of the things we have for you guys. If you have a list of stocks you want to look at, if you're looking for things that are potentially opportunities, I'm going to paste this in. I actually have a spreadsheet a long time ago I shared. I have all the ETFs with their holdings in them, and I'll tell you one of the cool things about ChatGPT is you can have it create like a shell script for like some kind of script. Ask ChatGPT to use Python or something, and it can go scrape those ETF holdings and then give you like a nice clean list that you can dump in the radar screen. So there's lots of cool things we can do now. I tell you, I'm going to be doing some more work also, by the way, on ways we can use AI to help us as traders. There's some interesting techniques that I've been finding for that, especially with TradeStation, because with things like easy language and some of the coding things that are out there, it's possible to just install something like Python on your computer, use ChatGPT to fire up some scripts, and then grab data from off the internet and then turn around and dump that into TradeStation like we're doing here. Anyway, we use Scanner, and now let's take a look because we can look and see. Right now, I'm not sure if there's any opportunities that we can mine around, and we can start to see here which names are active. So, for example, Occidental Petroleum, it trades a lot of options. You can see because it's highlighted here for average options volume. And well, I mean, this one is, I don't know, this company's had, I think, some balance sheet issues. But here it's pulling back to the 8-day exponential. So these are some of the things you can do. You can also go to fundamentals, and you can put them in there. So and you can see dividend yields, PE ratios, all that kind of stuff. We have the fundamentals tab. So I want to just quickly show that to you guys. Use the scanner. Go to indicators, sector equals quote energy, and then run, and then you'll get a list, and then you can do this for a lot of different sectors. When you say, wow, this sector's starting to work, I don't know the names, how do I find them? You can use scanner with that indicator, with the sector indicator. It's a really kind of great thing just to be able to do. The last thing I'll really quickly show you is one of the other little hacks. I showed the industry, and one of the ways you can do that is by going to this. Oh, what on earth is happening to my computer? Anyway, you know what? All right. You can go to industry, and you can set it to does not equal quote, and it will populate everything. And then what it allows you to do is it allows you, I'm going to try it one more time because I got to show you guys some options, some potential sort of things in the options market. But we go to industry, and then you go to this thing that's the does not equal, which is the greater than, less than sign together. And then what you do is you make it quote. What that will do is that will bring everything in that doesn't have like null as its industry. And what that will do is that will forcibly show all industries. So it's a little hack you can do with Scanner to do that trick. It allows you to bring information in without necessarily setting a criteria that would exclude stuff. It's an interesting little trick I figured out, and I'm going to share with you guys. All right, let's go to OptionStation Pro, and let's take a look at Microsoft, because all right, let's get over here, because like I said, the overall growth thing, is maybe not so wonderful. When we talk about Microsoft, I think 2 weeks ago, and it basically had rallied up to, I think, the 8-day exponential, and then it proceeded lower. We've been looking at Microsoft and the sort of problematic technicals in this one for a while, so it's slowly grinding down. I think at one point we had mentioned this thing at the 8-day as a bear flag, and then boom, it did go down like 12, 15 points. Here it is again at the 8-day. So let's take a look here on OptionStation Pro. Let's take a look at the April expiration on OptionStation Pro for Microsoft MSFT, and let's take a look at the 370 puts, for example. So Microsoft here, the recent low was at like 370, but if you kind of look, I mean, it's been trending lower. So what would happen? Is it possible for it to maybe go down to 365, which would be right there? Pretty much. I mean, is that so unreasonable? It would be the low of last December. Something people might say is possible if we are still in a bear market, for example. And this is the sort of thing where potentially people might want to be looking at, what can we do with option spreads? What can we do with vertical spreads? So a person might say, you know what? If it were to go to that level, they could potentially click on the ask here. We're going to the April expiration, expiring 17th of April, the monthlies. Click on that ask at the 370 strike, hold down the control button, and then click on the 365s on the bid, and that's going to build a potential vertical spread here for about $1. So I want to just kind of point that out. That's something people could look at. A spread like that would make roughly a little bit under 300% if the stock actually does drop to that lower strike at 365 or lower. Another one also that I've been noticing here is Broadcom, AVGO. Now, we did a trading view idea on this. and it did kind of hold its ground. It was saying, it might bounce, and it did a little, but it didn't have, it's not like the buyers showed up stampeding, knocking down the door. And so the thing here I think we have with Broadcom is we have a bearish flag potentially. So in Broadcom, look at this here. I mean, 180 is right there. So can it go from 180 to 170 by April? I mean, maybe. That's not like going, from here to the moon. I mean, it's, from 190 roughly where it is to 170. People might say, if we are kind of in a continuation of a downtrend, maybe that is some potential. So look at this one now of Broadcom, the April expirations at like 180. A person could potentially click here on this, and they could look down to the 170s. And you could see that this spread is potentially going for a little bit more than $2.50, but it's a $10 spread. So that's also roughly 300%. If it were to go to that 170 level, the stock is now at 190. So it's a move of a little more than 10, maybe 12% or so. That's Broadcom. Now, I guys also mentioned, I didn't really see anything in Super Micro, but Super Micro here does have what, we did a trading view idea in this one also. And, this is potentially bearish flag. You might want to check this out. It basically went and it hit a 50% retracement of this move, of this huge sell-off. I mean, I couldn't believe how big it was. It went from like over $100 to like, 20, and then it retraced exactly half the move, and now it has a potential bearish flag. So I want to just point that one out. The last thing is Apple. Now, the problem with Apple in terms of buying puts is that Apple has moved a lot. And one of the things you have to be careful of when something moves a lot is that it doesn't always continue to just move in that direction. It is extended to the downside after a move like this. So looking for Apple to kind of make new lows might be frustrating. But the nice thing about options is you can turn that on its head, and instead of buying the downside, you can potentially think about selling the upside. In a stock like Apple, that could mean, for example, we're going to now change the expiration. It takes some time for that time to bleed out. We want options that are going to really lose value quickly in this case. So we're going to go to the 28th of March, which is next Friday, and we're going to look here at Apple potentially. And now we're going to switch over to the calls. And on Apple here, a person might want to go and look at, they could now click on the bid, which means they'd be looking to sell the 215s, and they could then click on the 217s and a half, and buy those by clicking on ask, holding down control, and then you basically have $1 would be a potential credit. In this case, the most they can potentially lose is $2.50, but they already brought in $1. So the most they can lose is $1.50, and they'll make that as long as the stock basically stays under 215, which is right there. So the question is, do you think Apple will end next week under 215? Looking at this chart, that's your decision, but that's the sort of thing people might potentially think about doing. Another thing people might think about doing is that maybe you think, hey, Apple's great, they're going to turn things around, it's going to be awesome. In that case, a person might want to be thinking about they could potentially buy shares, and then they can be selling calls against them as a way to kind of reduce the exposure and still capture that time value. So those are some of the things I just want to kind of throw out there. We will be back on Monday with State of the Market. Hope everyone has, last thing I got to just mention, sorry, is that on this weekend, there is the Chinese Development Forum. Chinese stocks have been outperforming. They're pulling back in the last day or two, but there is a catalyst. People might want to look into that. Want to just kind of identify that. So hope everyone has a great day. See you Monday for State of the Market. Have a great weekend.